Good afternoon, Jim Stewart, the Chief Investment Officer at Worth Asset Management. Today is March 25th, 2026, and I'm going to go ahead and give you a market update. We're going to take a look at year-to-date performance, three key market insights, and I'm going to give you three key takeaways. All right, let's take a look at the performance. Boy, what a difference a month makes. U.S. equity indexes have now fallen for the fourth straight week as this Iran war continues. We had a lot of these, not only domestically, but also internationally, and as far as down as small caps, are all negative year to date. We see oil up 70%, and a lot of that has to do with this Iran war. Gold is still hanging in there, up about 4%. Bitcoin is in a correction, down 20%. Let's take a look at the sectors now on a 3-month basis. You see a lot of the defensive areas like energy, industrials, real estate, staples, and utilities all on the positive side, where you see the growth areas like discretionary, financials, and technology all on the negative side. All right, let's take a look at the first market insight. And this is taking a look at a graph of the S&P 500. And this blue line right here that's going horizontal is at the 6,500. That's a support level for this S&P 500. This red line is the 200-day moving average, and it has dipped just slightly below that. And usually not a lot of great things happen when we are below that 200-day moving average. So we've got to not only stay above this line at 6,500, we've got to move back above this 200-day, because if we break those two lines consistently, the next support level falls down almost in the 6,000 level, and that'll be a 10% correction from here. And shoot, the way the market is a little bit volatile right now, that could all happen in a day or two. So we've got to stay above these levels. All right, market insight number 2 is interest rates. We were trending down as the Fed was cutting rates. And now, because of the Iran war, every interest rate from the 2 all the way to the 30 have now started to rise. It has nothing to do with what the Fed might do. The interest rates say, hey, something's going on here. Inflation is raising its head again. Oil prices are going up. We are going to go up, and that's what's happening. Market insight number 3, we were supposed to be dropping interest rates this summer, but not so fast. We were supposed to get about a 50% chance that we were going to get a cut in June. Now it's down to 11. We were going to have 1 to 2 cuts by July 29th. And now it's only a 13% chance. Matter of fact, there's even talk now about hiking interest rates short term and then cutting them towards the end of this year to fight off some of this inflation that we're starting to see in oil and other commodities. All right, 3 key takeaways from this is that this outbreak of war has changed everything. Oil market volatility are here. As I've told you before, when we're in that 20 to 30 range on the VIX, when volatility is rising, we see big swings both ways. And we're starting to see that the VIX as of today is at 25. So we're right in the middle there. So I anticipate more big swings in volatility. And Trump tried to make a resolution last Friday. And he's trying to calm the market, but the potential for negative impacts on the global economy and the growth of this economy continues as this is drug out. So anticipate that the Trump administration knows this, and so they're going to try to do whatever they can to mitigate the length of this war. However, over this weekend, I think there's a crucial pivot point, and it may come out in the form of some sort of resolution or agreement, because the 10-year yield is heading towards 4.5, and that's almost like that key support level for the 10-year yield, because if we get over 4.5, that thing could easily go to 5% real quickly. And if that happens, then you're going to see this market, and you'll see bonds sell off, you'll see equities sell off, and we can't have that. And I, again, know the Fed and Trump know this, so they're going to do whatever they can over this weekend to try to mitigate that so it doesn't feed into next week. That's it for this week. Thank you for joining us. We'll catch you next time.